With interest rates going up and the market shifting, people are questioning if it still makes sense for them to buy a home. Today, I'm going to talk to you about something that you need to consider when you're making that decision, which is how much it costs to buy a house in Los Angeles. Particularly, I'm going to look at down payment requirements and closing costs. This channel is all about living in Los Angeles, where I cover communities all over the city. If you're interested in learning more about what LA has to offer, then subscribe to this channel and tap the little bell for notifications so that you can be the first to know about the current happenings and the market here in LA. I'm Anj Catalano and I'm with Craft & Bauer. I'm a realtor here in LA, and a question that I am often asked is what closing costs are and what they can include. So let's break it all down. As of 2022, the median price home for a single family home in LA is $951,000. So someone buying a median price home in California with 10% down would have to make approximately $13,500 a month to qualify for a mortgage. Now, the median household income in California is around $5,146 a month. So it's definitely hard to buy a house in LA on a single income. Let's assume you're buying $1 million single family house, and the minimum down payment requirement for a mortgage is from 3.5% of the purchase price, which is $35,000. But that with this monthly payment, you also need to include the principal and interest on your loan, taxes, and insurance, which would come out to be around $7,200 a month. In which case, you may actually decide to put 10% down and lower your monthly payment to around $6,300 a month. And that brings us to a new down payment cost of $95,000. If you're able to put 20% down, that would bring you to around $190,000. Let's talk closing costs. And for those of you who want the simple answer, you can expect to pay $10,000 to $15,000 for a property under $1 million. But this can vary, and it's really subject to a lot of things. There are upfront costs that you're going to have to pay during escrow within a few days of getting your offer accepted. The first one is the deposit. Typically, it's going to be 3% of your purchase price. This means that within 3 days of having your offer accepted, you'll have to deposit $30,000 into escrow on $1 million home. It's worth noting that this is a credit towards the down payment, so it's really not a closing cost. Inspection costs, which can vary from zero to an infinite amount, and it really depends on how much money you want to spend. I recommend that at a minimum, buyers do a general home inspection, which is currently around $500 for a 2,000 square foot home, a sewer line camera inspection, which is around $200, and a termite inspection, which is around $100. These are important because California structures are built from wood. Now, any further inspections would be based off of the results of these initial inspections and also the type of house that you're buying. So whether you have retaining walls on a hillside or a fireplace or a pool, you're going to choose different inspections. So let's say that the total inspection costs on a basic package would be around $1,000. An appraisal for a single family home can be around $500. Most banks will give you the option to expedite this for an extra $150, which I recommend you pay so that you can meet your contractual deadlines and to protect your deposit. With closing costs, some costs are prorated between the buyer and the seller based on their corresponding ownership dates. Typically, this will include property taxes and HOA fees. Property taxes can represent a big cost for the buyer at the closing table or no cost at all. And that really just depends on what day of the year the transaction closes and what the seller's property tax base is. I know this sounds a little bit confusing. So let's just say that the seller bought their property 30 years ago. Their property taxes are going to be much lower than yours, and you will have to pay that difference in taxes when you take over the property. In LA, property taxes are set at the time of purchase and are around 1.25% of the purchase price. These are paid in 2 equal installments each year in November and February. You're charged for a fiscal year from July the 1st until June the 30th. If the seller bought the property, say, just 2 years ago, then there won't be as much of a discrepancy in the assessed value of the property. So if the transaction closes on January the 1st, the seller would have already paid their property taxes in advance up till June the 30th, which means that you need to pay the seller back for the taxes that they paid in advance. If you close a transaction, say on September the 1st, the seller might actually have to pay you a sum of money back. But the point here is that prorations can represent a big cost or no cost, and they're variable, which is why it's always best to be conservative and set aside more money than you think you need as a buffer. That way you don't have to worry about when the transaction's closing or what the seller's property tax base is. If you were buying the property in cash, the only other fee that you would need to cover would be the escrow fee, which you also have to pay if you're financing the loan, but this would be the last thing that a cash buyer has to pay. It's typically based on the purchase price, and it can be around $2 per $1,000 plus around $250 as a base fee, as well as some other minor admin fees. So in this case, an escrow fee would be just over $22.50. Aside from other minor admin fees, such as city transfer fees and such, that would be pretty much it for a cash buyer. So this comes to around $5,000. This is much less than the 10 to 15K that I outlined at the start of this video, and that's because a significant amount of your closing costs in LA are actually associated with financing and lender requirements. So let's take a look at the rest of the closing costs which are associated with your loan. Firstly, the lender's charge. This is what the lender charges to process your loan. Commonly, most of this fee is already built into the interest rate, and if this is the case, you might only have an admin fee of around $1,200. The other option is that fees are paid up front, but let's for this video go with option 1 and a cost of around $1,200. These fees, while they're not directly paid to the lender, they are lender requirements, so they typically will have to be assumed when financing a purchase. The lender's title insurance policy is to ensure their investment. Their lender is going to require that you purchase a title insurance policy, and for $1 million home, this will cost you around $1,000. This policy will protect the lender and any issues that could potentially arise in the chain of title. A lender may or may not require anywhere from 3 to 6 months of property tax reserves. For this scenario, let's assume that the lenders want 6 months in property taxes. On $1 million home, this would be around $62.50. It's important to note that whilst this item is showing up as a closing cost, technically is not a fee. These are ordinary costs that you would normally pay, but you're just being asked to pay them upfront at the closing table by your lender. Lenders will typically require a buyer to pay a year's home insurance policy upfront. Additionally, they may also require some reserves on this. So let's say on $1 million home, an insurance policy would cost you between $1,200 to $1,500. If your down payment is less than 20% of your home's purchase price, your lender may require that you get private mortgage insurance, PMI, until you hit the 20% equity mark. PMI is an insurance policy that will protect the lender against losses if you default on your loan. Now, typically, there's going to be a gap between the day that you close your transaction and your first monthly mortgage payment. So this is another cost that's going to vary depending on what day of the month you close, and it will be charged per day. If you close at the beginning of the month, this will add approximately 1 full month's pay to the cash that you need to close, and that increases the total that's due at closing by around $6,300. And once we add this to the upfront costs, which are approximately $19,000, and add the 10% down payment, we will have a final cost to purchase a medium price home in LA at around $114,000. Obviously, if you put 20% down, this number will be higher. Every property is different. So if you're buying a condo or a house, or you're in a gated development, these factors all affect your closing costs. When you open escrow, you can ask escrow to give you an idea on the estimated closing costs. You should also know that there are going to be other miscellaneous fees, like paying for a traveling notary, messenger, having your documents sent to you via FedEx, as well as HOA transfer fees. And these can all add up to a couple of $1,000s as well, depending on how many of them you need. Please keep in mind that all the costs that I've outlined are only estimates and really can vary based on so many different factors, including the terms of your contract. Home ownership is expensive, and as interest rates are fluctuating, you may be wondering if it's worth buying a home or even moving. The truth is, in Los Angeles, you have to look at the bigger picture because properties are appreciating year over year. The best advice that I can give you is to buy when you can comfortably afford the monthly payment. If it's too high, keep saving until you can put more down. As if you have a mortgage, it's really like a forced savings account. Mortgages force you to save because the money is going into your home, and every month that you pay your mortgage means a portion of principal is being paid down, which builds your equity over time. It's also the only way to fix your housing payment over a long period of time because you can opt for a fixed rate mortgage compared to rent payments, which are appreciating. I hope this video was useful. Please don't hesitate to reach out if you have any questions. Thank you so much for watching.